the illusion of perfection. In the 1980s, Japan felt inevitable. The future had an address, and it glowed in neon. Sony, Toyota, NEC. Bullet trains on time, factories like cathedrals. Precision sold as destiny. Real estate prices rose without gravity. Skyscrapers climbed, and with them, confidence. The Nikkei shattered records and kept climbing. Tokyo property was priced like myth. People joked the Imperial Palace was worth more than California. It felt less like a market and more like a coronation. The country had a word for it: miracle. A miracle of coordination. Banks, corporations, ministries, moving like a single machine. The Ministry of Finance directed capital with a nod. Keiretsu groups cross-owned one another like a safety net. Credit was never far. Failure felt unthinkable. Power became a routine, a perfect routine, and that was the flaw. A system too efficient to fail becomes a system too proud to pause. When a nation forgets the cost of error, it stops pricing risk. Risk doesn't disappear. It accumulates in silence. Under the neon, leverage multiplied. Homes financed more homes. Shares financed more shares. Land collateral became a religion with quarterly rituals. Growth looked effortless because debt did the heavy lifting. And then a whisper returned to the room, the oldest whisper in finance. What if this is not perfection, but pressure? What if the machine that never stops has already gone too far? Japan didn't hear the whisper. Or maybe it did, and chose the music louder. The land of endless money. It started with money, not a trickle, an engineered flood. After the Plaza Accord in 1985, the yen surged, exports wobbled. To cushion the shock, the Bank of Japan cut rates. Cheap money became cheaper money. Credit swelled like a tide with no moon. Banks lent because everyone was borrowing. Companies borrowed because prices only moved one way. Land was collateral, collateral was wealth, and wealth unlocked more loans. A circle so perfect it looked like science. And when a circle becomes faith, it stops being questioned. The Nikkei sprinted toward 39,000. Golf memberships traded like small islands. Teenagers played the market after cram school. Magazines taught day trading as if it were etiquette. A neighbor's windfall became a family strategy. They called it asset inflation. But underneath the charts, it was faith inflation. Belief priced like a commodity. Euphoria with a ticker. On paper, firms were indestructible. Cross-shareholdings made bad numbers vanish in a tangle of friendly balance sheets. Losses were managed. Loans were evergreened. The convoy system promised no bank would sink alone. When markets rise, every trick looks like wisdom. When gravity returns, wisdom asks for receipts. December 1989. The curve shivered. No crash. Just hesitation. The kind of pause that turns a song into a memory. At first, no one panicked. Perfection doesn't fall, it recalibrates. That was the story, but stories need buyers. By 1990, buyers stepped aside. By 1991, land began to sag. A home was still a home, but the number attached to it was now a rumor. Then, it all stopped. Not with an explosion, with the sound a luxury engine makes when it rolls downhill. Quiet, heavy, inevitable. The fall. No one saw coming. The government called it temporary adjustment. Newspapers suggested a soft landing. But the landing became a landscape. Banks refused to confess. Non-performing loans became non-existing loans. On paper. Companies marked yesterday's values on today's assets to keep yesterday's promises alive. Accountants grew creative. Optimism became policy. Japan didn't crash. It froze. And that is a different kind of disaster. A crash burns quickly and clears the field. A freeze preserves the shape of prosperity while removing its pulse. Factories slowed without headlines. Bonuses shrank quietly. Lifetime employment turned into lifetime anxiety. Young workers learned new words: contract, temporary, irregular. Ambition became caution dressed in a suit. Corporate Japan tightened the belt, but kept the suit pressed. No mass layoffs, just slow, surgical austerity. Projects delayed, hiring postponed, hope rescheduled. Meanwhile, the state searched for the ignition. Cut rates, spend more, guarantee some debts, then more debts. The machine coughed, but it would not start. Economists named it the lost decade, a neat label, a gentle warning. But time, once lost, rarely travels alone. This wasn't an episode. It was a new epoch, a place where momentum goes to rest and stays. The lost decades begin. By 1992, the glow had faded into office light. Rates drifted toward zero. A nation of savers saved harder. If prices might be lower tomorrow, why buy today? Deflation took root like frost, thin, silent, stubborn. Each policy thawed a square meter. The winter returned by morning. Confidence, once a flood, arrived as a mist and left as a rumor. The Bank of Japan tried patience, then ingenuity, window guidance, liquidity waves, and then a phrase the world would memorize years later: quantitative easing. The central bank began buying government bonds, propping up prices, pushing down yields, asking markets to feel safe again. Safety came, growth did not. Banks were kept alive. Some shouldn't have been. They became zombies, moving, paying wages, rolling loans, but dead to the future. A debtor kept on a ventilator cannot sprint. An economy of ventilators cannot run. The 1990s bled into the 2000s. GDP barely stirred. The Nikkei never reclaimed its old summit. Debt climbed a staircase that pride refused to count. Yet there was no collapse. No breadlines in black and white. No revolution in the streets. Trains still glided. Cities still gleamed in the rain. From far away, everything looked fine. That was the genius and the curse. Japan mastered the art of survival without momentum, stability as policy, permanence as anesthesia. The bill was paid in time not spent taking risk, time not spent reinventing failure, time converted into safety, then into stillness, then into habit. An aging nation leaned into predictability. A cautious corporate class filed edges off ambition. Innovation didn't die. It learned to live inside acceptable boundaries. The world pointed, laughed, lectured. And then, one by one, copied. America printed in 2008. Europe followed. The planet flooded itself in 2020. Zero rates went global. Quantitative easing became a household term. Japan was never a cautionary tale. It was a manual for how to avoid collapse and how to pay for it with decades. A manual for how to keep the lights on and dim the future by a few watts each year. Japan didn't disappear. It adapted. It learned to breathe in slow motion. But adaptation has a price, not in yen, in possibility. You can survive a fall. You can even survive a winter. What you cannot survive, not forever, is forgetting how spring is made. And somewhere between the numbers and the neon, a question kept returning. What if Japan didn't fail? What if it simply chose a different kind of success? One measured not by acceleration but by endurance. The lost decades weren't empty. They were full of choices. And now the world is making them too. The debt machine. Debt became oxygen. Everyone breathed it. Government borrowed to spend. Corporations borrowed to survive. Citizens borrowed to pretend. The balance sheet swelled, but the pulse stayed weak. By the early 2000s, Japan's public debt had surpassed 150% of GDP. Today it stands near 260%, the highest among advanced nations. How did they keep borrowing without breaking? Because the lenders were their own people. Japan financed Japan. A nation lending to itself, trapped in a circle of trust, too tight to escape. Foreigners called it stability. Economists called it discipline. But discipline without motion is stagnation with manners. The government kept rates near zero, then below zero. Banks earned nothing, so they hunted risk abroad. Corporations sat on trillions in cash, too afraid to invest, too polite to fail. This was capitalism in standby mode. Still powered on, but the screen frozen. Every few years, the Ministry of Finance would announce a new stimulus. Bridges, roads, reforms. The headlines moved, The GDP did not. Deficits became tradition. Debt became culture. Interest payments turned invisible. Because zero feels free, until it isn't. Japan had discovered the future before the world did. A perpetual economy powered by promises, maintained by silence. The human cost. Numbers don't capture exhaustion. Charts don't show loneliness. The cost of stagnation isn't collapse, it's erosion. An aging population watched its youth vanish into overwork and underbirth. By 2020, 1 in 3 Japanese was over 60. Schools closed for lack of children. Villages emptied like forgotten pages. The salaryman, once a national hero, became a ghost in a gray suit. Leaving home before dawn, returning long after midnight. They called it karoshi, death by overwork. A word so tragic it exists only in Japan. Young people learned a quieter vocabulary. Freeder, hikikomori, neat. Freeder, part-time drifter. Hikikomori, self-exiled in a bedroom. Neat, not in education, employment, or training. The miracle generation raised children afraid of the world it built. And beneath the politeness, a quiet sadness grew. Not despair, but resignation. The same word repeated across surveys, supai, bitter. When an economy forgets growth, a culture forgets aspiration. But even stagnation has dignity. Trains still ran on time, crime stayed low, order endured. The world saw calm, Japan felt pause. A nation that once redefined speed had mastered stillness. But stillness is not peace. It's the sound of ambition learning to whisper. The warning to the world. For 30 years, the West pointed and lectured. Japan is unique, they said. It can't happen here. And then it did. 2008, housing bubbles burst across America. Banks froze, governments printed, interest rates collapsed. QE became gospel. By 2020, the world had joined Japan's club of the motionless. Zero interest, infinite debt, aging populations, central banks afraid to blink. The same economists who once mocked Tokyo now quoted its manuals. They called it modern monetary theory. Japan simply called it Tuesday. The irony was perfect. The country once accused of failure had quietly invented the global survival guide. But survival is not triumph, it's delay. The rest of the world is now discovering what Japan already knows. That the cost of avoiding pain is living without pulse, growth replaced by maintenance, crisis replaced by routine, risk replaced by reassurance. The modern economy isn't collapsing, it's hardening. And like Japan, the world may not explode. It may simply fade. The epilogue, the price of stillness. In Tokyo, the lights still shine. Trains glide with mechanical grace. From a distance, it looks perfect. Up close, it feels paused. That's the paradox Japan built. A future that arrived too early and refused to leave. People learned to live inside stability, to measure time in comfort, not change. To trade growth for quiet survival. Maybe that's not failure. Maybe it's evolution. Because what if progress isn't speed, but endurance? What if the real miracle is learning to stand still while the rest of the world chases collapse? Yet behind the neon, the same whisper lingers. Without motion, there is no creation. Without risk, no rebirth. Empires once fell with wars, now they fade with demographics. The soundtrack of decline is not explosion. It's silence, and silence spreads. Across continents, interest rates fall, populations age, and governments promise that stagnation is stability. They're all following the script Japan wrote in hesitation. The question is no longer what happened to Japan. It's what's happening to us, because maybe the lost decades were never Japan's alone. Maybe they were the rehearsal. The prototype for a future where the world keeps running, but nowhere new. Fade to black. Wealth wars. Where money decides empires. Subscribe now and watch what happens when the rest of the world starts to lose decades of its own.